Warband. The new chieftain at the head of the table finally drew his blade, and it cut sharper than the soft hands ever wanted. This is Thursday, June 18th, 2026. Yesterday, the Federal Reserve met for the first time under Kevin Warsh, and the market that came begging for mercy went home bleeding. Listen, as of just past 5 o'clock Eastern, Bitcoin trades at 64,400, down 0.9% on the day, barely a scratch. Ethereum sits beside it at 1,750, off near 1%. Solana at $72, a shade red. Hold that lightly, because the number that matters this morning is not how far crypto fell, it is how little it fell. On the very day the Fed turned hard, here is what happened while you watched the close. At 2 o'clock Eastern, Warsh held the rate where it sits, between 3.5% and 3.75%, and the hold was never the story. The dot plot was the story. The committee's own midpoint for year-end leapt to 3.8% from 3.4%, penciling in a hike where the market had penciled in a cut. It lifted its own inflation forecast and pointed straight at energy as the reason this inflation has stalled. Better than 6 in 10 odds now price a hike as soon as October. The 2-year Treasury yield ripped 16 basis points higher, past 4.2%. Stocks took the blow. The S&P shed better than 1%, the Nasdaq near 1 1/3, the Dow more than 500 points. The crowd came in praying for a dovish wash. It got cold steel, and our engine called the flush in real time. At the 4 o'clock bell, Warsh still taking questions. The InvestAnswers Decision Support System lit the board top to bottom. The broad market itself, the S&P 500 and the Nasdaq, flipped mean reversion overbought, stretched, ripe to flush. Tesla and Palantir, the high beta darlings of this whole run, caught to optimized trend bearish in the same minute. Coinbase overbought beside them. And here is the tale that should stop you cold. Gold and silver, the very metals that have led this scarcity trade, both flipped optimized trend bearish in that same window. The hawkish turn lifted real yields, and the metals that pay you nothing bent to it. Then after the bell, one name flipped the other way. Broadcom, optimized trend bullish. The artificial intelligence iron still bid even as the rate-sensitive momentum rolled over. Read it as one sentence. The stretched got sold, the metals bent, and the hard iron of the build-out held. And mark this, because I told you it was coming. Days ago, I warned you, Warsh distrusts his own committee's forecast machinery, that he might sideline the dot plot and rule by ambiguity instead. Yesterday, he did exactly that. He abstained from the dot plot. The new chairman would not even put his own mark on the chart he handed the world. Now here, Jordi Visser at 22V, because he hands us the frame. He calls this the Fed's four-way trap. Debt, oil, growth, and jobs all pulling at once. Debt too heavy to fight inflation with real pain. Oil keeping the headline sticky. Growth slowing under the weight, and employment the leg about to dominate. Warsh can preach price stability all he likes. Visser's point is that he cannot actually deliver the pain without breaking the jobs market underneath him. The hawkish hold is the posture, the trap is the truth, and a trap that ends in real rate suppression is the single largest catalyst, the hardest money has ever been handed. Which brings us back to what crypto actually did under that hammer. The metals bent, the time chain did not. On the same afternoon, the Fed turned hawkish. Equities shed better than 1%. Yields surged, and gold and silver rolled their trend over. And Bitcoin gave back 0.9% and held its ground above 64,000. Sit with that. The non-yielding metals flinched at the real rate shock. The hardest money on earth did not, and underneath the candle, the strong hands kept doing what strong hands do, Long-term holders swallowed 125,000 Bitcoin this month, coins walking out of weak exchange-traded hands and into wallets that do not sell. The brutal fund outflow streak that defined the month cracked green on the 16th, the first real inflow in weeks, and the fear and greed gauge sits at 22. Deep fear, the exact zone where the crowd capitulates and the patient load. Visser says it plainly. He is not losing sleep over this slide. He calls it a rotation that runs 3 to 6 months. And he argues Bitcoin already carved its bottom in the mildest cycle correction of its entire history. The float concentrates in the dark while the headlines scream rate hike. Gold answers to the real rate. The time chain answers to no one. Now lift your eyes from the rate cycle to the machines, because while the Fed talked, the abundance engine shipped again. Yesterday, XAI pushed Grok Imagine Video 1.5 into wide release. Image to video, 15-second clips in high definition with native sound conjured in about 25 seconds, and it landed first on the board that ranks them. Read what that means through the same lens. Moving pictures, once the work of studios and weeks, now spill out of a machine in half a minute, near free, near infinite. That is the other half of Visser's thesis, and it is the whole reason we stack. He calls it artificial intelligence as the new easing. The machines drive the cost of made things toward zero, which frees the central bank to run loose and pushes every free dollar toward the things that cannot be printed. The video is infinite. The compute and the watts that forge it are not. And 21 million coins answer to no committee, no chairman, and no render farm. So here is the frame, Warband. The new chairman drew his blade, and the soft hands bled. But the hawkish posture is a setup, not a verdict. And the trap Visser maps closes on the Fed, not on us. The stretched got sold. The metals bent, the hard iron held, and the hardest money of all barely flinched. So do what the strong hand always does on a fearful, hawkish morning. Let the weak sell the scarce thing into the gloom, and you take it with both hands. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Until the next dawn, sharpen the axes. Skål.